Hey everyone, welcome to my channel. So today we're going to talk about how to invest $5,000. And again, before we get into this topic, I will let you know that I would never tell you to do something that I don't personally do. However, this is a tricky topic because when you get to that $5,000 range, there is so much more opportunity for you, so many different investment strategies that I do have to address some of them for you so that you are aware of what you're capable of. Now, I have my mind in plenty of different areas when it comes to that amount of money because I'm originally from Brooklyn, New York City. And so I'm going to have a little bit of a different perspective depending on where I'm located when I'm talking about $5,000, right? So, what $5,000 will do for me in New York, personally, I would invest that in the stock market. I'm going to invest that in low dividend paying companies with high growth potential. This is going to be my Apple stocks, low dividends, high growth. This is going to be a little bit of VOO, low dividends, high growth. And when I say high growth, it's really average growth because it's the top 500 companies. So just a little bit of that mixed in as well. You're going to have your BlackRock. You're going to have your ADP. You're going to have so many different assets to choose from, your NOBL, ETFs, just to name a few. Now, I only invest in about 30 companies, and I say only as if that's not a lot. But if you listen to me enough, you're going to hear me talk about the same companies that I invest in all the time. And so you'll get an idea of what I'm actually invested in over time. And yes, all those companies that I did list, I do have those in my portfolio. So go check those out and see if that's something that you would be interested in. But again, it's no skin off my back. I know I'm going to be and already am rich regardless. So if you think that those companies work for you, again, the things that I always tell you to look for is, do you use these companies? Do you understand what the company is about? How are they making money and how will they make more of it? Do you believe in the company? If all those four things align, and then you start to look at their numbers, how has it done in the last year? If it's down in the last year, that might be a good sign depending on the news and why it is down. If it's down for some nonsense reason and you believe it's nonsense, that's a good sign. And then you want to look at the 5 year, their 5 year mark. Are they up on the 5 year? If they are, that's a good sign. I don't care if they're down in the 1 year period, but they better be up in the 5 year period because there's no way I'm going to invest in a company for 5 years just for them to be negative. Not doing it. 1 year is okay. 5 years, absolute no for me. And then sometimes if I really need to reassure myself, and I don't do this often, but if I really need to reassure myself, I'll look at their 10 year. What are they producing in a 10 year period? Right? And then the last thing, if I really need to reassure myself, this should actually be before the 10 year period watch. How much volume are they doing? Are they doing at least 300,000 in volume a day? If so, that might be a good company to invest in. It has a lot of traffic. A lot of people know about it, which means a lot of people are using it. All right. Now in Columbus, Ohio, where I am currently, there's a lot more that I could do with 5,000 than just invest. The first thing that I would do personally is invest. If I don't have 5,000 in investments, I'm not looking at real estate really. And then there's not much real estate you can buy. So let's say I was never a veteran in the Army. Let's say I don't have a VA loan at my disposal. So that means that I can only do an FHA loan with $5,000 because I cannot go conventional. Conventional is at least 5% down. And even on a $100,000 property, which you won't find anywhere anymore. Actually, I'm lying. I did find a property for like $90,000, but it was in the worst area ever. And the property did look like it was ready to go. It was brand new built. I was almost shocked. Okay. So you will find some properties for 100,000. So excuse me if if I just misquoted. So you can actually buy a property with 5% down. And here's why. Some people might already be saying there's no way you can buy a property 5% down, because even if it's 100,000, you still have closing costs, so you're going to pay more than $5,000. Like I said, you can buy a property 5% down, and here's how. You can get the seller to pay the closing costs. So now you paid $5,000 for the percentage, and the seller paid the closing costs. What does that mean? You literally paid $5,000, put 5% down on $100,000. You didn't have to pay the closing costs. Therefore, you literally got into that property with $5,000. Make sense? Absolutely. Here's another one. Well, the seller may not pay your closing costs. Yeah, that is absolutely right. Property is already cheap. Why would they pay your closing costs? Especially if it's a brand new build. Even if it's in a bad neighborhood, the first thing you're going to hear is it's priced accordingly. Well, then that property might not be for you, or you need more money. Either way, I'm telling you how to utilize $5,000. And yes, it is possible. Okay. Again, the property's 90K right now on the market. You can probably get half your closing costs paid, and that should equal out to about $5,000. What's 5% of 90,000? I don't know. Like 4,500 or something like that. So again, do some research, understand. Now, if it's me personally, and I see that $90,000 property on the market, what I'm going to do with the knowledge that I know now, I'm actually going to buy that property. Even though it's in a bad neighborhood, it's $90,000 and I have 5,000 cash. I'm going to negotiate. I might even get it down to 85,000 with closing costs, half the closing costs negotiated. I'm going to put $5,000 down, and I'm going to get into that property. And when I get into that property, the rent is not going to be more than what I was paying when I first moved to Columbus, which was about $1,200 a month. So off the bat, I already know that I am swimming in equity. I'm swimming in equity for the simple fact that I'm not paying rent anymore. So that's the first thing I wanted to get away from. Now, is this property going to appreciate in value like no man's land? Absolutely not. Is this property going to become the best property in the world? Absolutely not. But one thing I will be able to do is, if it has an additional room, which I believe it does, I'll be able to rent out that room. Now they're paying $600 a month, and my mortgage is what, $900 maybe. So now I'm only paying $300 on that property, and this is a property on the market right now. Now, again, I would not do this unless I was living in the property, house hacking it, because I just do not like the area. But for anyone who watches me living in Columbus, Ohio right now with $5,000, there's money to be made right now. And for me personally, it wasn't worth the headache for me to purchase that property. Of course, I have the money right now to do it, but let me not detract from the story. I'm just telling you that there's a deal out there right now for someone who's willing to live in that property. Can you buy it and not live in the property? Sure, but you're going to need more than $5,000. You're going to need to put 20% down and make it a rental property, which means the interest rate is also going to be higher than it already is at 8%. So that's a whole nother thing in itself. But then again, you have the stock market as well. Same thing that I said with New York, you can do in Ohio, you can do in Boston, you can do anywhere in the world. And then lastly, obviously, I can talk about so many different other stuff like angel investing, high interest savings accounts, Series I bonds right now that's yielding about 4.5%, and so many other different asset classes that are available to you. But the best use of your money would either be, if you don't have any savings, it would definitely be to put it in a high interest savings account. Secondly, if you don't have any investments, I would say start off with the stock market. It's cheaper, it's less stress, you'll learn a lot, and you don't have the headache of being a homeowner and having to deal with maintenance costs. And then if you do have up to $10,000 because you split it between your savings and your investments, and you got that extra 5,000, I would actually go and buy that property that I'm talking about now, because now you're living for about $300 a month, and you get to make YouTube videos like this and basically claim to be an expert to some degree, right? You have some stocks, you have some savings. That means you're above the national average. Most people don't even have $1,000 in savings. Most people don't have any investments whatsoever. If they do, it's no more than 14 grand. And if they do own a property, they're not able to afford the maintenance costs and all that things that go with it, right? They're living paycheck to paycheck, unable to really house hack, might even have a family, which all of that stuff is good and well, but you have to understand, how can I get ahead? How can I do things to get ahead? And in future videos, if you do have a family, you can't house hack properties, you can't do some of the things that I'm talking about, we will address those topics as well. But again, this is just for the beginner coming in, $5,000, doesn't have anything more to invest, just getting started. That is exactly what you can do to get ahead. Okay? So if you like this video, make sure you leave a like, comment, and subscribe. You know I post every single day at 8 a.m. daily, and I can't wait to see you on the next one. Peace.